How to win Compxm Round 1 to Compxm Round 4 Guide. Get top results 999, latest and best free Compxm 2025 answers. Compxm, Strategic Decision-Making Framework for Business Simulation Excellence. A practical MBA-level guide introduction in business simulation environments like Compxm. Success depends not on isolated actions, but on a synchronized, data-driven strategy across all business functions. Round 2 presents a critical juncture where foundational decisions from Round 1 begin to show consequences, providing both diagnostic insights and opportunities to optimize for performance. This guide offers a structured, academically grounded walkthrough of Round 2 decisions in the Compxm simulation. It focuses on 5 integrated areas of operations: R&D, marketing, production, human resources, and finance, along with a brief section on total quality management, TQM. Each decision is aligned with industry benchmarks, customer expectations, and long-term corporate strategy. Performance review and financial context. Before initiating Round 2 decisions, it is essential to conduct a retrospective analysis of the firm's current standing. Key performance metrics: Round 1 recap: return on sales, ROS 1.6%, asset turnover, 1.26, return on equity, ROE 2.1%, leverage ratio, 1.7, return on assets, ROA 3.4%, emergency loan, $0, sales revenue, $153 million, net profit, $2 million, contribution margin, 28%. These indicators suggest a business in stable, yet modest growth. No emergency loan implies liquidity is under control. However, the low ROE and net margin highlight underutilized capital and potential inefficiencies, issues to address in Round 2. Research and development, R&D. The R&D function is fundamental in aligning products with evolving customer expectations. Segment-specific updates were made to enhance product performance and size to better match ideal positioning in the perceptual map. Segment targets and revisions. THFT segment, low tech O customer price range, $14 to $26 O reliability, MTBF 14,000 to 20,000 O ideal specs, performance 7.2, size 13.0, age 3.0 O new design specs, performance 7.3, size 12.9 O revision date, August 3, 2025 core segment, mainstream O price range, $20 to $32 O MTBF, 16,000 to 22,000 O ideal specs, performance 9.6, size 10.6, age 2.0 O new design specs, performance 9.8, size 10.4 O revision date, June 10, 2025 nano segment, high-tech O price range, $28 to $40 O MTBF, 18,000 to 24,000 O ideal specs, performance 11.5, size 6.4, age 1.0 O new design specs, performance 12.0, size 5.9 O revision date, April 6, 2025 light segment, leading edge O price range, $30 to $42 O MTBF, 20,000 to 26,000 O ideal specs, performance 13.8, size 8.7, age 0.0 O new design specs, performance 14.0, size 8.5 O revision date, March 21, 2025 strategic note, all updates position products closer to customer expectations. Accelerated revision dates ensure timely market entry, improving demand responsiveness and reducing obsolescence risks. Marketing strategy. Marketing decisions were driven by a blend of price positioning, promotion, sales force effectiveness, and demand forecasting. Pricing and budgets. For consistency and customer perception stability, prices remained unchanged across all segments, each already well positioned within expected price thresholds. Promotional and sales budgets were also maintained to avoid disrupting customer awareness and accessibility levels. Segment promo budget, $000, sales budget, $000, THFT 2000 2500 core 2500 2500 nano 3000 3000 light 3000 3000 forecasted demand. Accurate forecasting is essential for aligning marketing with production and minimizing excess inventory or stockouts. Based on segment growth rates and previous year's sales data, the following unit forecasts were applied: product forecasted units EA, THFT, 2,160 units Atom, Core, 2,400 units AF, Nano, 1440 units AGAP, Light, 1420 units. Forecasts were cross-referenced with pro forma financials to ensure contribution margins remain within target ranges post-update. Production management. Production planning. To meet forecasted demand and allow for buffer inventory, the following production levels were scheduled: product units to produce EA 2160 Atom 2400 AF 1440 AGAP 1420. Capacity expansion. Upon recalculating capacity utilization, the system identified a shortfall in available production lines. To prevent bottlenecks, capacity was increased by 300 units for each product line. Product capacity added: EA 300 Atom 300 AF 300 AGAP 300. This expansion incurs an upfront investment cost but prevents lost sales and production backlogs. No changes were made to automation levels to preserve labor flexibility and avoid overstretching capital resources. Cumulative investment, approximate $30 million, out of a max allowed of $64 million. Human resource development investments in human capital yield returns in productivity, reduced turnover, and process quality. Consistent with best practices, the following decisions were applied. Recruiting spend, $5,000. Training hours, 8 hours per employee. This maintains a motivated workforce and supports the company's lean manufacturing and TQM strategies. Financial strategy. Financial decisions aim to support operating and capital expenditures while maintaining optimal liquidity and solvency. Cash flow position, opening cash balance, $63 million. Closing cash estimate, $65 million. New long-term debt issued, $6.3 million. No short-term borrowing or equity issuance was required. Long-term debt was selected to minimize interest costs and avoid equity dilution, while ensuring sufficient liquidity for capacity expansion and TQM investment. Total quality management, TQM. TQM initiatives enhance long-term efficiency by reducing operational costs, cycle times, and improving demand. TQM budget allocation. Each of the 5 initiatives, material reduction, labor cost reduction, admin reduction, R&D cycle time reduction, demand increase, received $1,000 in funding. TQM initiative investment, $000, process improvement, material, $1,000. Process improvement, labor, $1,000. R&D cycle time efficiency, $1,000. Admin overhead optimization, $1,000. Marketing-driven demand enhancer, $1,000. This $5 million investment is modest yet sufficient to produce measurable gains in efficiency and competitiveness across functions. Projected outcomes and performance indicators. Upon recalculation using the pro forma financial tools, the following key projections were derived. Projected balanced scorecard score, 66/80. No emergency loan forecasted. Sustainable net margin increase. Healthy ending cash balance. Improved contribution margin and ROE. This indicates strong alignment across departments and robust financial health. The simulation is moving towards strategic coherence and operational effectiveness. Conclusion. Key takeaways for MBA students. Compxm is not simply a simulation, it is a microcosm of real-world strategic management under uncertainty. Success in Round 2 requires: 1. Cross-functional thinking. Aligning R&D, marketing, and production ensures product-market fit. 2. Financial foresight. Avoiding cash shortages while investing in growth is a delicate balance. 3. Operational efficiency. Capacity planning and human capital investment must support strategy. 4. Customer centricity. All decisions must ultimately respond to segment-specific customer preferences. 5. Data-driven iteration. Review of reports and forecast adjustments is essential every round. For MBA participants, this exercise underscores the importance of integrated decision-making, scenario planning, and performance diagnostics, which mirror actual corporate leadership responsibilities. If you seek additional support for Compxm or capstone strategies, you may reach out for structured mentorship or tailored simulation coaching. Fastest support to get top results $9.99. Email behelp2002@gmail.com. Blog https://capsimguide2021.blogspot.com. Free Excel file for all 4 rounds. Download from blog or send the email. Online quick support Q&A equals WhatsApp equals https://bit.ly/3sil-p9u whole game support equals $40 for 4 rounds plus 5 quizzes support equals top results.